What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I want to thank you guys again. We are at 8,000 subscribers strong in this YouTube channel, and without you guys, I wouldn't be doing these videos, and I enjoy doing these videos for you guys. So make sure you smash that like button, and again, hit that notification bell so you don't miss future videos. So I have 3 of the highest paying dividend stocks that I am buying for April. I'm going to reveal these to you guys. I am long in these guys. One of them is kind of a risk. It's kind of a new kid on the block, and these are high yield dividend stocks, and they're all less than $20. So they're pretty affordable. This is where I can kind of dollar cost average on my M1 Finance Dividend Portfolio or my E-Trade Dividend Portfolio and throw money in with these guys. And again, if I can get to 100, 200 shares in some of these guys, I can do some serious damage. So let's check these stocks out right now. Now, I just did a video on these guys, AFC Gamma. I'll go over them again if you guys are new to this channel. They have 11.33% dividend yield, and these guys are very exciting, and they're a little bit of a diversified mortgage-backed real estate investment trust, which I'll go over with you guys. So Advanced Flower Capital Gamma is a leading provider in institutional loans to high-quality Mary Jane companies nationwide in all aspects of production, cultivation, processing, and distribution. We offer loans and related facilities generally secured by our substantial assets such as real estate, licenses, and cash flow. With years of combined lending expertise and real estate experience, AFC Gamma's principles are now focused on the exponential growth of the Mary Jane industry. The Advanced Flower Gamma is it's a commercial finance REIT that blends cash flow and real estate underwriting. So AFC Gamma's Real Estate Investment Trust, which gives investors access to income generating commercial real estate investments. Not only is a real estate vehicle appropriate for a real estate lender, but a REIT that offers investors special benefits. It's income oriented with the REIT principles eligible for a steady stream of distributions, and since REITs earn their tax exemption by distributing at least 90% of their income to unit holders, additionally at a 20% qualified business income deduction, REITs can typically generate a more higher yielding taxable cash flow to their investors. So these guys are new. So that's one thing. They're a new kid on the block. So we need to check out their revenue and how they're doing with their dividends. So again, these guys are so new, it's hard to compare them against the S&P. But I just want to go over their revenue. In March 2021, it was $4.62 million. The net income was $1.4 million. The net profit margin was 30.33%. Operating income was $1.55 million. Net change in cash $117.17 million. June, the revenue was $8.1 million. The net income was $4.63 million. The diluted EPS 0.34. The net profit margin 57.11%. Operating income $5.11 million. Net change in cash, big deal. September 2021 increase in revenue, which I like. The net income is 7.93, so the revenue went up from 8.1 to 9.96. Diluted EPS 0.47. The net profit margin 79.66%. Operating income $6.11 million. The net change in cash negative $54.63 million. Not too concerned, but I'll tell you my concern after this. The revenue is $11.69 million. The net income $7.04 million. The diluted EPS 0.41. The net profit margin 60.25. Operating income $7.2 million. The net change in cash $39.27 million. So this is kind of a new real estate investment trust. So this is one thing that we have to be careful with. Don't quote me on this, this is not financial advice for entertainment purposes only, disclaimer in the description. If a recession hits, these guys are going to take a big hit. There is almost a guarantee, okay? I mean, their business model is pretty strong because they're focused on the Mary Jane business, but this is one thing that can really hit these guys is if a recession hit. I mean, they're gaining a lot of momentum. Their revenue, look, March 2021, $4.62 million. And then December 2021, it was $11.69 million. So you're seeing quarterly how they're doing revenue-wise. They're increasing revenue, but if something happened, there'd be a lot of problems. So let's jump to the next dividend stock. Oh, wait, I got to go over the dividend trends real quick. So right here, I'm glad I caught myself with this. So right here, we have 38 cents, then 43 cents, and 50, then 55. So the dividend yield is 11.33%. The PE ratio is 13.57. Annual dividend is 220. And that's just one thing. It's less than $20. It's a stock that's very popular right now amongst the dividend investing community. But just be careful with this one. I'm going to be a little cautious with it. I'm going to take a risk and put money in it. I just, if a recession hits, these guys are in big trouble. Let's jump to the next dividend stock. Here's another one that took a big hit during the pandemic once it hit. New Residential Investment Corp, NRZ, has a dividend yield of 9.29%, a PE ratio of 7.14. Remember, REITs, FFO, volume 5.39 million, the market cap 5.02 billion US dollars. Its year range was 898 to 1181. Day range was 1071 to 1086, and its previous close was 1084. So what are these guys about? Their mortgage-backed rate and their differentiated portfolio. New Residential has a differentiating, hard-to-replicate portfolio with a diversified, high-quality investment strategies. Our portfolio is comprised of investment options that have appropriate characteristics to deliver strong returns and value in various interest rate environments as a natural hedge for the overall portfolio. In addition, through our subsidiaries and partners, we have an origination and service platform as well as portfolio of complementary businesses that provide real estate related services. NRZ's diversified mortgage servicing strategy positions the company to capitalize on partnership opportunities that help improve service performance, minimize risk, and enrich customer experience, and maximize the value that they serve. So here's their portfolio. Consumer loans, 1%, mortgage loans, receivable, 6%, residential loans is 9%, residential securities and call rights, 13%, MSRs and server advances, 18%, servicing, 29%, and origination, 24%. Now, one thing I want to go over is their revenue and their dividend trends. So check out these trends in revenue. This is 2015, 645, 2016, 1,194, 2017, 1,944, 2018, 2,192, 2019, 1,962, 2020, 268. This is in millions US dollars. Look at this hit these guys took during the pandemic. And no wonder why people like myself are buying the dip on these guys. 2021, 1,795. So they're rebounding very fast. This mortgage-backed rate is rebounding really fast, and this is why I have them in my portfolio, and this is why I'm buying the dip. Let me show you its dividend history. Look at how these guys have done over time. 2013, 7 cents, then 17 cents in 2014, then 35, then 38, then 45, then 46, then 48 cents, then 50 cents in 2017, 2018, 2019, 2020. You see the pandemic hit. Okay, it goes down to 5 cents, then 10 cents, and 15, then 20, and then it's jumping up right now at 25 cents, and it's sitting at 10.78. So there was a big drop, but this is why I bought the dip, because their revenue is jumping up, and their price per share is pretty cheap right now, and it's a 9.23% dividend yield, PE ratio 7.04. Again, FFO is the most important. Annual dividend $1. And these guys are cheap, and this is why I capitalized on the dip. Hopefully, again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. I'll say that 1,000 times. Looking at these trends, hopefully they will get back to 50 cents eventually. That's going to take a long time to recover, but I'm willing to park my money in, put money in this stock, and just allow the dividends to start popping up and taking advantage of the dip. Let's jump to the final dividend stock. And this is probably my favorite mortgage-backed real estate investment trust. It might be one of my favorite REITs overall. Arbor Realty Trust. ABR is a symbol. It has a dividend yield of 8.60%, PE ratio of 8.46. Look how it's done against the S&P in the past 5 years. It's actually beaten the S&P in the past 5 years. Volume 2.38 million. The market cap is 2.76 billion. Its year range is 1575 to 2074. Its day range was 1699 to 1734, and its previous close was 1730. So what do I like about these guys so much? So Arbor is not just a commercial and multifamily lender, but your financial partner that personally works for you to customize the right loan solution deal after successful deal. For close to 25 years, Arbor Realty Trust has helped multifamily and commercial real estate clients achieve their financial goals by focusing on growing long-term relationships and conducting businesses as not simply another real estate lender, but as a partner. We value our clients to such an extent that we're more comfortable with calling them partners, and their relationships with Arbor are the foundation of our businesses. Check out their revenue. Look at these guys with the revenue. This is in millions US dollars. 141, 2014, 2015, 142, 2016, 213, 2017, 346, 2018, 484, 2019, 535, and 2020, 603. They're going up even during a pandemic, which is very impressive as a real estate investment trust. And they're cheap and they're less than $20. And let me show you their dividend history, which is insane. All right, check out these trends. 2013, 13 cents. Went to 2015, 13 cents. 2015, 15 cents. 2016, 16 cents. 2017, 18 cents. And then looks like we have 19 cents, 2017. 2018, we got 25 and then 27 cents. We got a special dividend right here at 15 cents. 2019, 27, 28, 29, 30 cents in 2019, 31 cents in 2020. Then it was still increasing its dividend, 32, 33, 34, 35, 36, 37 cents. And it's 17.22 with an 8.55% dividend yield, a PE ratio of 7.59, an annual dividend of 148. So out of the three, I like ABR the best. The biggest risk I would probably say is AFC Gamma, which I'm still buying. I'm buying all three of these, and I'm long them. I will take the risk with AFC Gamma. But ABR Stock, Arbor Realty Trust, as well as NRZ Stock, those two are really hot right now because one, there's a dip. And I'm capitalizing on the dip. I'm buying all three of these dividend stocks. These are some of the highest paying dividend stocks out there. Real estate investment trusts, which are very popular, mortgage-backed REITs right now. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Start Dividend. You guys have a good one. And in the comment section, tell me what stocks you want me to do a review on. I'm getting a lot of messages. I need you guys to keep on reminding me. You got to hit that notification bell so you don't miss future videos as well. Take care and have a good one.